Welcome to Thursday, everyone. Happy to have you join me here for our long verticals and diagonals webcast. I'm Connie Hill, and every Thursday at this time, we talk about these two strategies specifically. Now, we've spent quite a bit of time talking about diagonals. And sometimes these diagonal trades last a long period of time. They can last a long period of time. So my question to you is, have any one of you figured out a good way to track your diagonals? What do you think? If so, I'd be interested to hear what you say today. Go ahead and chat that in, but I've got 4 different methods we're going to talk about today, maybe that you could utilize to help you track your diagonals. Now, I am joined in the chat by good friend and fellow coach Barb Armstrong. She's here to help me field your questions. Maybe some of the things I can't quite get to, Barb will help out with. So happy that she's here, great veteran of the markets. I know a lot of you love going to Barb's classes. She does a fabulous job. All right, let's go through our disclosures, get down to business. I'm happy Barb already encouraged you to follow us on X. I'm Connie Hill CS, she's Barb Armstrong CS. We'll post educational content throughout the trading week and sometimes the weekends. You get to get little photos of what we maybe have going on. All right, options carry a high level of risk and are not suitable for all investors. What we talk about today should be intended for education and informational purposes. Don't consider it a recommendation. We'll be using the Paper Money software application. It's the most robust version of Thinkorswim. It's a little bit different than your mobile version or your web version. So know that it's very powerful. One difference in Paper Money is that it will not assign early. It doesn't duplicate that functionality. So we like to make sure that you're aware of that. Past performance of any security or strategy does not guarantee future results or success. When we're talking about probabilities, which we do quite a bit in this class, keep in mind they are theoretical in nature and not guaranteed. All right, Greg's letting us know he uses a spreadsheet. Chris says spreadsheet is the way I've found. Perfect. You guys, at least 2 of you have found a way to track them because they are a little bit more detailed trades, and we'll talk about why maybe we don't see all the data all at once. All right, announcements. Barb is going to be down at the San Diego Market Drive event this weekend on Saturday. So if you are anywhere near that area, hopefully you've signed up for that event. It's just one day, it's on Saturday. We are so nice to you. We feed you, we pay your parking, you can mingle with us. Barb would love for you to come up and say hello. If you are somebody that knows her, she would love to meet you in person. So would Ben, so would everybody there. I think that's there at the event. We want to meet you. All right, we in this class have 2 strategies we focus on: diagonals and verticals. And time, price, and volatility are something that impact every option, and so we try to talk specifically about in that particular trade how do those Greeks work. We're going to look at a lot of examples. So let's get started here. We're going to take a quick look at our some of the positions we've got going on that some of you have been tracking. Just want to look at the markets real quick. It looks like volatility had spiked here earlier today. It looks like that is starting to bleed off here a little bit. But it's still, you can see up here in the 20s where it's a little bit more volatile. So there's a little bit more rough moves in the market, and we'll have a tendency to see premiums elevated. And sometimes we see spreads kind of spread out a little bit artificially wide than maybe what they are during periods of lower volatility. So that's something to keep in mind. We were down early on the SPX. Let's see what it's done. We've been trading in this sideways range on the SPX, right? Stuck between 7,000 and this 677.5-ish area. And then yesterday, the SPX did something interesting where it broke above this kind of diagonal resistance here, because this is actually a triangle formation. It could be starting to form a descending triangle formation, and it popped above it. Okay, above that. So this now should act as support. What happened today? Well, it went back through it, but it looks like SPX buyers are moving back in, moving the SPX off its lows. Okay, so Again, it's back above it, although earlier today it looked like, oh man, we've lost that. Let's take a look at the NDX real quick. On the NASDAQ, it hasn't been trending as strong as the SPX. There have been some different cycles transitioning, I shouldn't say cycles, sectors that have been rotating a little bit, and industry groups inside the information technology. So it's kind of like some of the names were getting beat up for a while. Now some of them aren't getting beat up so much. Now the semiconductors are a little bit more in favor. Anyway, that's really moving a lot of what's going on the NDX. But you can see here, it was stuck in this trading range, about 24, 4.5, we'll say, up here to 25 and some change to 89. It was just kind of stuck there, and it's still there today. Ran right up to that line. Well, I should take that back. It moved there and then fell really quickly. But now buyers starting to buy it back up. Yeah, SPX, Chris says, yeah, SPX bounced off your diagonal line as well. Yeah, very good. Let's do this. Let's talk about Walmart. Walmart was a trade we put on, last week with a conditional order. And we said, if it doesn't meet these conditions, we don't want to get in. And it hasn't filled us. Okay, so last week we were sitting at what? The 19th. Let's see, this is the 17th, 18, 19, right here. And we said, if Walmart really bounces up and gets above that day's high, which was 130.10, we put in an order there at 130.2. Okay, so that if it did start moving that direction, we would get filled on it, but we would not get filled on it if it didn't move that direction. And that's what those conditional orders can help us with is, hey, if the stock does what I think it might do, let's get our order ready, but save ourselves in case it really doesn't. And in this case, it really pulled back. Now, the question would be, would we really want to be in that kind of a trade down? All right. What I'm seeing here is we had a lower low, and then 2 days ago, we had a higher low. So that long call vertical trade, I don't think we really are interested in it anymore. Okay, I don't know if any of you traded it or not, but we're going to go get rid of it. Okay, we are not interested in it anymore. So let's come over here to our working orders, come over here to Walmart, and we're just going to cancel that order. Be done. We're not interested anymore in that one. All right, Verizon, we did a long vertical last week on Verizon. You can see the date we got in here. And the next day, man, it ran up and it went past our long or our short leg, our 50 strike price. We have a 49.50 here. And it went past it pretty quickly. And so it was sitting in a pretty decent position. Since then, it's pulled back a little bit. This blue line is a 10-period moving average. It's still above the 10-period moving average, so not really all that alarming. We've got to March 13th, so we've got a couple weeks left in this particular trade. So the next, say it does surge and rallies above this 50 area. Maybe it makes a slightly higher high. We can do a couple of things. We could put in a price target here, or we could, a price target or a target based on technicals, okay? The order we have in right now is based on a price target. If we get 70% of the max gain, then we said, let's take us out. When a trade is kind of advancing, you can go ahead and leave that order alone unless you say, maybe in the next one, maybe it gets a little bit past 50.48. What was it here? The high here was 50.24. So it went about 24 cents higher, right? So we could put something like that in and say, all right, if it gets up to maybe the $50.70 area, just take us out of the trade, or you could leave it alone at its price target. One is not better than the other. It's just more a matter of how you think maybe it might trade out, how you might be happier the way it would play out. Does that make sense? We'll leave ours for right now, but you could take that approach as well. All right. Some of you have been following along with our Morgan Stanley trade. Morgan Stanley, we've had a lot going on with it. And actually, this is kind of tracking the values in this particular trade is what got me thinking about how are the different ways that maybe we could track. a trade like this, because we started clear back here. This was January 15th. They had a great earnings report that day, went rallying up. And so we put on a diagonal here. But you can see kind of what it's done since then. It's just been really lethargic. Hasn't really moved that direction that much. So we've used this opportunity where it's been going sideways to sell calls against it and bring in some premium, help offset the cost of our long leg here. Earlier this week, a couple of things happened. One is, and we'll go to the account statement here for this one. And we're just going to look what's happened since last week. Okay. So we had sold here, we rolled, that created this new diagonal. We rolled and bought back our option, the 172.50 that expired February 20th. And we rolled it to this February 27, the 177.50. Okay. Then the 24th, which was Tuesday, we had most of it. Okay. We had most of the 217. We only had 25 cents left, and it was on Tuesday. So I thought, well, let's roll it again. So we did. We rolled it again. We bought this one back for 25 cents. We sold this one for $1.08. Oops, I didn't really want to click on that. See if that'll come back. Well, I guess it won't. The $1.08. And then yesterday, what happened with Morgan Stanley? Pop. Yeah, it had a nice big pop. And so at, let's see what time we did this, 12:23. So most of the trading day was gone. This is in Mountain Time Zone, okay, 12:23. We were seeing this get just, it gapped up here, and then it was started going really strong. Well, would we want that short call working against us, knowing that maybe the stock wasn't going sideways so much anymore, that maybe it was starting to put in the kind of move we'd been hoping for all along? No, so we bought it back. We did buy it back at a loss. What was that value there? We bought it back for $2.69. So the difference between these two prices is basically what we lost by buying it back. However, was that the right decision? Well, only time will tell if it's the right decision. I'm going to say so far today, it has been the right decision because it has continued up. And so what we're going to do on this one is we're going to let this continue to run up, if it will. It's above the 10 now. It would be nice if it could get above this 50 and 30-day moving average. So we'll see what happens. I wouldn't say that it's broken diagonal resistance here. Like if I were to draw this in, well, maybe it has. Depends on what line we want to use. We could use this top shadow line there, and maybe it's looking like it's running into resistance today. That might be one angle. We could look at this that maybe is a sharper angle, hits a few more candles, and then could look like it broke out of that today. Okay, so yeah, that's what we're going to do with it. When it gets to a point where maybe it starts doing a little bit of sideways action, smaller candles, maybe looks like it might want to reverse, then that's when our timing is going to say, let's go ahead and sell another call against this. In the meantime, our Morgan Stanley is improving a little bit. Come over here to our activity and positions, and let me do some cleaning up. Oop, that's the one we want to open. No, we don't. We'll close that. We bought it for $16, that long leg. Now it's worth $7. It had been worth $6 and $5. And when it was down to 6 and 5, it was like, maybe you want to close this trade out, but we just continued to sell against it. We are still negative, however, on this particular trade. Okay. Now, as I look in the chat, and I notice this, we have a survey out there. And those of you that are new might not know that once in a while, they'll put a survey out there to see how things are going in this class, specifically for today. Today, we're talking a lot about management and tracking those diagonals because they're more advanced trades. I would expect you guys would need to stretch a little bit when you come to our session here, all right? However, we want to know. So there's two easy questions. You just put in the radio button, plop, plop on a scale of 1 to 10. 1 is bad, 10 is lovely. And that's it for the survey, unless you want to answer 2 questions. And I'll also encourage you, and a lot of people do this, I encourage you to use that as a space to write something to me that you maybe have a concern about, would wish that I might talk about or bring up in a session coming up. Okay? Whatever that happens to be. I like to address those questions at our sessions as soon as I can. All right. So we've got this situation of tracking our traits. Trade we didn't talk about, and in video, we're just going to kind of leave it alone right now. Tesla. Tesla is a trade. We've been in it for a little bit, but not as much time as our Morgan Stanley trade. Okay. In here right now, our long is the April 375 put, and our short is a 400 put. And our idea with this one is that this hedge leg here, we started out a little bit out of the money, which we wanted to do. And the one that we sold against it was more out of the money. Okay, but we collected 510 on that day, and now it's down to $1.15. Well, that's interesting. And how many days does it have before it expires? Has 1 day. Let's go look at the chart on this one. And as we look at this, it will introduce one of the ways we could possibly try to track trades. All right, we're going to come over here to Tesla. And on Tesla, 400 is our short put. Now, some of you might look at that and go, for Tesla, 409 is kind of close. I mean, it's $9 away, but percentage-wise, it's not that far away. Now, if it stays above 400, stays out of the money, then we get to keep all of that 510. However, if it doesn't, then we might fall in a position where we're assigned, or we're concerned we're getting close to where assignment typically takes place. With 1 more day left, the question is it worth it, or would it just be time to roll it? Okay, we're going to use the opportunity to roll today, okay, since there's only 1 day left and it's in a good position. And then we'll come back to these numbers on the chart. Okay, so here on Tesla, actually, let's come over here, and we're going to do a right mouse click. We're going to say create closing order for just this single one. And actually, let's do a rolling order so that we can close the one leg and sell a new leg. We can do that in one simultaneous motion. It's called a roll. If that's confusing to you to do it that way, do it the old-fashioned way, where you just say, I'll close out my one leg and I'll go sell my new leg. Okay, that's just fine. Now it says it's making MS is making a hammer on the weekly chart. It probably is looking like a hammer on a weekly chart, which is a reversal pattern. Appreciate that. So here's our leg. We're going to buy back our 200, or rather our 400 puts. But let's see where we might want to roll it to. Now remember, Tesla has lots of additional days that we can roll. It now has Monday, Wednesday, in addition to the typical Friday expirations that it has had. So we have a few more choices here that we didn't used to have. Now, there is nothing magical about doing it on a Monday or a Wednesday or a Friday. For our purposes, it might be handy if we did use Friday so that we can kind of see maybe where it's sitting when we meet together in class again if we're still in the trade. We could do it on Wednesday with the idea being I'll do stuff without you because I'll probably need to do something because it would expire on Wednesday and we meet on Thursday. Okay, there's no right or wrong to this, but we're just going to go with the one on Friday. Simply because if it's possible for you to see what's going on, I want you to be able to see what's going on. All right, what strike price? I mean, we're currently at a 400 strike price. We might want to go a little bit further out of the money, maybe. We could go to a 30 delta, a 26 delta. Both of them still have some pretty decent premium associated with it. Let's go ahead with the 395. So we're going to change that one to 395. And it's picked March 2nd, and we're going to change it to March 6th. Okay. And this is what the credit that we're going to roll for right now. Okay. So it's basically paying off the old one, selling a new one at the $395, which is about $425-ish in premium. This will take our midpoint. We're going to hit confirm and send, and it knows what bucket to send it to. All right. Now, so we just got filled on that. Now let's go back to the chart. And let's go back to this idea of how can you document these traits? Number one is something that may or may not be useful. It might be useful in the beginning of the year, not so much at the end of a year, in the middle of a year. There's this little section down here called profits and losses. Okay. And we can do it by symbol or a particular group if you want to. We're just going to do it by symbol. And so say on Tesla, it's early in the year. We're still in February for a couple more days. And oh, I should have written something here. Let me do something real quick. Let's write. Well, let's just pay note of, okay? This first column is our P&L open for whatever position we're in right now. This P&L year to date, that'll be our fourth column over. These are the two we're going to look at. So we're going to come down here to Tesla, and we're going to see, okay, the position we're in right now is reflecting we're down about $150. But year to date, we're up over $1,100. Now, the tricky part of this is knowing, well, if I've only traded diagonals on Tesla, then I could rely on this to give me, okay, year to date, what have we been making on these Tesla trades and these rolls that we have? But if it's a stock that you trade frequently and you trade all sorts of trades on it, maybe you sell verticals on it, maybe you buy verticals, maybe you buy long options. If you've got other types of trades in here, this doesn't help you as much know specifically about the diagonal, okay? So that leads us to way two, which is possibly using the chart to document. So I came in here and I said, okay, let's put in what we paid for our long leg. When we initially created that diagonal, we paid $12.90 for it. We rolled here, and I made this vertical line. How did I make that vertical line? Use this little drawing tool here. It's called a time level. Okay, and I'll just draw one in here so you can see what it looks like. That's not what I didn't get the right drawing tool. Let me click on it better. I just pointed to it. Wherever you put it, it's going to draw a line. Okay, so, and it's just going to follow along wherever the date is, and that's how I lined them up with that date there and this date here. All right, and when you initially put it in, it's going to take on the properties that you have in there. And you might go, oh, I don't exactly want it to be quite all the way up and down, right? So we might go, okay, let's edit and let's turn the extensions off. So if we say off and off, and I chose a different color here, and I've got it just at a width of, I think actually we're using a 3. Then we could save this as our default, so it'll always do it that way, which I think I'll do, although, you know, we might come in and change it for different adjustments. So then you can see, okay, when it doesn't add the extensions onto the top and the bottom, this is what we're left with, okay? And then you could move it if you wanted, okay? So another way would be, well, okay, we sold this one for $510, and let's see here. We did on the roll, there was a $510, there was a $420, and the one that we went and bought back here was, well, actually, we didn't do it. This was, I was going to just fill our numbers in here. This is what those numbers were looking like yesterday. But we could go back to our area here, maybe not so much profits and losses, but our trade history. And then we could come in here and say, okay, what were the values we used here? Yes, here was this initial $510 that we sold it for. And that was the 400 put. And then when yesterday it got rolled, or today when it got rolled just now, we bought it back for $125. And we brought in a credit here of $440. So we could go back to the chart and we could document it that way. Can you see that that might get a little messy? Yeah, it might get a little messy. However, it is a way that we could track it. And maybe you do want to just put some loose numbers out there if you want to see what day did I do this. Okay. So the last way that, well, actually, there's two more ways. Another way we can do it is using a trading journal. Okay. We have a trading journal for you. It's not specifically for diagonals. Okay. But let's show you where this is. And we're going to head over here to our Schwab. And we're going to go learn. And we're going to come over to Schwab Coaching. Right. This is where we have our calendar. This is where we have some information about coaching. And then what we're going to do is we are going to come down to where it says live webcasts and virtual live workshops. We're going to click on this calendar, or that button rather. It's going to take us to the calendar. And one place that I know this is always sitting is in trading a smaller account. I guess I'm trading that or teaching that tomorrow, but usually that's Barb Armstrong here, right? So we'll go to trading a smaller account. And then I want you to see right here, it shows resources trading journal. Okay. Then we have a couple of little videos here to teach you how to use the trading journal. And there's one that you could use for just stocks. There's another ones you could do and put in all your option trades, and you could maybe do a single line item for each of these calls that we're selling and buying them back for. What did I sell for? What did I buy it back for? What did I sell it for? What did I roll it for? You know, basically close it out, buy it back. So those are some ways that you could do it. All right. Now, a couple of you in here said the only way I've been able to figure out how to do this is with a spreadsheet. And it's probably it's going to be your personal preference. Yeah, CB says, well, the trade journal does not show realized gains and losses because you've got to fill them in. Yeah, the trade journal, you've got to fill that in, and you want to have a separate line item for each of the calls or each of the legs that you're working with. Now, another thing that you could do, and this is just something I was tinkering around with, is this idea of building just a really super basic spreadsheet. Okay. And in my super made up worksheet here, we would come in here and we would put in a symbol. So like we've been working with Tesla, so I might stick Tesla in there. And then we'd say, okay, the long leg was whatever. I just said it was the November 24 100 call to just put an example in there. That's not really what we're doing with Tesla. I think it's totally different one. And then you could put in, well, how much did that long leg cost? For just ease of numbers, I'm just going to put in $5. Doesn't mean it was $5. Okay. And then say the first short leg in a diagonal was, say, September 24. Again, just making up numbers, something further out of the money, 115. And so maybe on that one, we collected, say, $2.50. Okay. Then we might record it that way. And then every time we make a change with the short leg, we do something here in this column. Every time that we make a change with the long leg, then we would adjust it in the long column. Now, I don't know that any of these systems are perfect. You might come across something that maybe you modify that's perfect for you, but I did want to give you some ideas because that's a real situation that you have is, how do I track all these calls? And it's similar, like say a covered call. You own the stock and you're selling calls against it. You've got to track every single time you sell a new one against it, because it's not going to show up in your position statement because we no longer have the position. We've either booked the gain or booked the loss. Okay. So hopefully that makes sense to you. Now, we're not going to put anything into place. Okay. We're not going to track anything realistically here from our trades, but this is a way that you could do it. Chris is sharing what he uses, a product. Excellent. Appreciate you sharing that information with us, Chris, because I think finding a trading journal that works is, once you have it and you find it, then it's like, oh, I enjoy it, right? It really helps you out. Now, Virginia says that I record the Greeks on each Friday during the option holding period. Will the journal add these if there is a link? I don't know. Virginia, I don't know. Sorry. Maybe Chris can tell you on the journal that he's using. That is a possibility. Yeah, and Abby says, there are a number of trading journals, app services. I'm going to have to let other people answer this. Do you know if Thinkorswim links to any of those for automatic imports of traders? I don't actually know the answer to that, but I have worked with people in the past who have like the programming mentality and skill set, and they have been able to build into their spreadsheets. They've been able to build something in, but I am not a programmer. I do not work with APIs, none of that. So I can't really give you a good answer, but I love it when you guys share information with each other, things that you've tried out that you've seen work. All right. While we're on off the Thinkorswim platform, we're going to come over here for just a quick moment. I hope all of you are Trader Talk subscribers by now. We preach about it probably every class, letting you know. And the reason that it's nice is because you can find our content so much easier if you're a subscriber. That's how I find other people's content. I subscribe to a lot of different YouTube channels. And I love going down there to have it say subscriptions, and then the subscriptions, this is on my phone, goes across the top and shows you so you can choose which subscription service you want to look at. So coming up next in our class will be investing in dividend stocks with Cameron May, and then you can see the rest of the day here. And yeah, I think I am covering for Barb tomorrow while she is in her San Diego trek to that Market Drive event. Although, no, I think Barb said you were actually going to be teaching it from the hotel. Barb will correct me, okay? I think she said she's going to teach it from her hotel tomorrow. All right. In any case, subscribe makes it easy to find our stuff. All right. Back to our Thinkorswim. Let's look at doing some new trades. We're not going to do a diagonal trade today. We're going to do some long verticals today. I've really harped a lot on the diagonal, so let's kind of shift our gears a little bit. And let's look at a couple of stocks here. It might be newer to you, maybe not. Circle Internet. This is something that IPO'd this, well, I guess I can't say this year anymore, in 2025, related to Bitcoin processes. I'll just leave it at Bitcoin processes. Look at this earnings announcement. So this wasn't their IPO. Let's see something real quick. 1 year. Let's see how far it goes back. June 5th. Okay, so that's when it went live, June 5th. You can see it got up here almost $300, and then a steady decline, steady decline, steady decline. Is there potential for it to recover? Well, obviously, absolutely there is, right? But it's got to make some moves. Let's come back here. So breaking above this Fibonacci level that could have been acting as resistance was nice to see yesterday. Then it has some follow through today. And the retracement on the move of this particular Fibonacci, I guess, puts it up here about 107. Now on this, we can see huge volume moving in. And this one might be one of those stocks we could do a long vertical on because it's looking like it's moving. And we want to use stocks that are on the move when we're doing these long verticals, because typically we need the stock to make some movement. Not always, but sometimes. All right, let's go see what things look like right now. It has weekly options. We're not going to use any of the weeklies. We're going to come out here to the March 26. And the ones, let's see if these still look good. The ones that were looking good to me this morning was an 85.90. And you can see new strike prices are in here. It has just been in $5 increments. And then recently they rolled out these in between. So 86 through 89 are newer. So you can see they don't have open interest. In fact, today could be the first day that they're actually trading. Okay, because we're seeing volume here. There was no open interest here. So that lets us know today's the first day. Okay, looking at 85, which has a ton of open interest. And 90. Let's see if this still looks good. Buy. and then 85, and then we're going to change this to 90. And it's going to be a 270 debit. Now, on a $5 wide spread, sometimes we might look for spending $250 on it to make $250, but we don't have to treat it that way, okay? What's interesting about this one is, where is the price of the stock right now? Well, it's almost at 90. Does it need to move a lot to go past 90 where we need it to go to have optimal profits, right? Yeah, it only has to move like a little bit. Okay, and we could risk, I'm going to leave it here. Oh, okay, 273 is better than 275. We're just going to let it stay there. All right, and we can, in this particular trade, depending on what your risk tolerance is, maybe you can only do one contract of each, okay? In our class, we'll let ourselves risk at least, or I should say up to $2,000 per trade, okay? So we could do how many contracts? Well, let's grab our little handy dandy calculator here. Let's go 2,000 divided by 273, because that's our max theoretical loss. We could do 7 contracts, okay? So we're going to put in 7 contracts here. And then we could, by using the Fibonacci, pick a target, so based off technicals, or we could do it based off of a profit target. And many times we'll just do the profit target in our class, but there's lots of ways you could do it, okay? So let's do our 1 trigger sequential. And if you wanted to put a stop in there as well, you could do an OCO order if you wanted to. We are so close to this 90 that I'm having wishful thoughts that it's going to kind of continue that direction, okay? So let's do a create an opposite order. And what would be, let's just see what this is now. Oh, it's a little cheaper now. Oh, this is good. This is good for us. Okay, risking 255 to make what? 240 or 245. So that's almost 100%. That's changed. Oh, this is good. 250. All right. Let's go to our calculator. What is 70% of 250? Because 250s are now max theoretical gain. So 2.5 times 0.7 is going to be $1.75. So we're going to add, okay, we're happy if we can get 175 per contract out of it. We'll be happy campers. We are not going to hold in there for every little last bit, okay? So we're going to add that to 250. That says, all right, go buy it back at 425. All right, done. Let's do it. Let's see. Now, what was that again? Was it 4 point? Let me go back. I think it was 425. Okay, yeah, 425. I didn't want to goof on that. And then let's make it good till cancel. Hopefully it'll get to that point. We don't know. Oh, this might get filled even maybe, well, let's just leave it at 250. It's showing the midpoint now at 252. Let's just leave it at 250. We're going to submit that. We're going to put it in our diagonals and long verticals bucket that we keep track of. Now this is, Thea, thanks for answering or asking your question. The question you asked is, why bearish on this? Because I totally goofed. That's why we're bearish on it. I totally goofed on that. We don't want to go that way. We want to go 85.90 on the call. Well, it is on the call side. Okay, I was thinking, you had me thinking I did it wrong there, Thea. So we are going bullish on it, okay? We're looking for this stock to move above 90. It's already at 89 and change. At a long call vertical, we're basically saying, yeah, this is a good enough lift that we think it's turning the corner back to bullishness. It's above its 10, it's above its 30, it's above its 50. Okay, and made a higher high. So that's why we're going to go bullish on it. Okay, so on a long vertical with a call, it's bullish. You scared me. You made me think I did it wrong there. I'm glad I didn't. Chuck says, is not good to do a long vertical over a period of time, say like 6 months to a year. You can build these however you want, okay? you're trying to balance the move with having time decay work in your favor as well. And so if, say, we did go out 6 months on this, we did a similar type trade, that would give it plenty of time to make the move, but it probably doesn't need that amount of time to make the move. And in the meantime, we don't have theta values that are very high to work on that sold leg that help bring in profit for that trade. And I've done something before, I'll just share this with you, where I've done the very same spread on one that had, say, like 30 to 50 days, something like that, or less, or 20. And one that I went out further to the next month. So we had a whole extra month's worth of premium, basically, that we paid for, and we had plenty of time for it to make the move. The one that I did the shorter time frame, because the stock moved the same for both trades, well, it hit our profit target sooner on the one that didn't have as much time. But I would say this, I mean, this is 22 days. 1 day would be really short time frame. 8 days would be pretty short time frame. Okay. But we are going out kind of the end of the window that a lot of traders like, 20 to 50 days worth. 20 to 40 is ideal. Sometimes we have to go to 50. All right, we're going to send this puppy off. Put him in that bucket. All right. Let's look at a couple more things in our last little bit here. Let me just look at a couple of stocks and see which ones look better for our situation here. So VNOM, and let's just come back here to say the last 3 months. We can see it was up here at 48. Was it done recently? Man, it has been moving along this 10-period moving average, had a little 2-day pullback. Today, some people might look at that as a hold type candle. Hasn't closed yet, so technically it's just a trade above the high of the low day, which would have been yesterday's candle. And this is a nice bullish engulfing candle. That's showing a lot of power. Let's go ahead. We're gonna do this one, and we might have to run through this one a little bit quicker. All right. This one I was looking to do long calls, doing a 45 and a 47, and it's kind of smack in the middle there. So let's go 45 by vertical, and we're going to change this to 47, spread it out a little bit. Okay, so in a $2 wide spread, our max theoretical loss there's 120. Our max theoretical gain would be about 80 cents. Okay, so it's still a fairly high percent return we're looking for here. What does the stock have to do? Well, it's got to move from 46.36 past 47. Does that look like, where's 47? Here's 47, about right here where my mouse is. So for 3 weeks, is that maybe a move that it possibly could do over the next 3 weeks? I don't think it's undoable by any stretch. Okay, so we're going to do the same thing there. Let's just do here. We'll do 10 contracts. That's risking clearly less than 10,000, or rather 2,000 of our what we're willing to take on in risk. Create an opposite order. Grab our calculator. Let's see. All right, 80 cents times. Okay, let's go 0.7 again. We get 70%. It could be 80. It could be 60. It could be 50. It could be whatever number you'd like it to be. So we capture 56 cents of that max theoretical. We'll add that to our 120, and we'll go buy this back at 176. Now, suppose this trade goes on for a while, and it could. We don't know. It could go on for a while. Could we change our target? Could we change what we are willing to get filled at? Absolutely, we could. There's nothing that says it must stay this way, but this is just our initial target. And if it were to get close to that, maybe we're getting close to the time that it's going to expire, then what we might want to do is change the target and maybe just get out. You're like, oh, I made $700 here. I haven't made $700 for a long time. Let's go ahead and take it, right? That you're like, that's a decent profit target, depending on your account and who you are and so forth. All right, let's send that trade in. So we've got 2. Now, I actually wanted to do a bearish one today because we're getting a little bearishness in the market. However, we don't have time to, but if you were looking around for a bearish trade, one you could consider is Google. down below those moving averages. It's bouncing down off its 10 today, making look like it didn't make a lower low yet, right? But that did make a higher low here, and now another higher low. So that one could be a potential bearish opportunity if somebody wants to practice some bearishness. Now, I'm going to encourage you to do all the paper trading that you can as you come to know and understand these strategies. Okay, that's the best way to really learn. And then if you're doing a trade that I'm doing here in our class, you'll have questions as you're managing that trade, right? You'll be going, oh, well, I wonder what we're doing in our class trade here, because this is maybe what I think of the situation. Okay, whatever it is, helps us learn a whole lot better. All right. So appreciate all of you being here today. I'm going to remind you again, there's a survey in the chat. We love to have your feedback. Feel free to let us know what's on your mind, if this was helpful for you today. And if it was, also go ahead and hit the thumbs up button on the way out. That lets others find the content as well. So we'll follow up on these trades next week. You can bet on it. And Barb, thanks for your help today. These guys were not too hard on you, which is good. All right, appreciate it. We'll be back top of the hour. Cameron May, investing in dividend stocks. We'll see you there.